Hey guys, welcome back. Today we're going to talk about how you can use the financial statements to diagnose some issues, and basically what we're going to discuss are really how you can unearth operational issues within your business just by looking at your financial statements. Okay, so the first one that I want to talk about, I've updated our August 31st balance sheet a little bit to handle this, but one of those areas that you got to be concerned with is going to be increasing receivables. So increasing receivables can be a problem, and there are always exceptions to the rule, right? If you're just increasing receivables and without the increase in a commensurate amount of sales, that could be a problem, right? So, we're not looking at an income statement here where we could see an increase in sales, but if we are increasing receivables because we're not collecting, that's the issue. Okay. So the next one is inventory, and it's a similar thing. Without a commensurate increase in sales, and obviously if you're a retail or even a service-based business, your cost of materials or cost of goods and your cost of labor aren't going up along with the revenue, this is going to be a problem. If you've got increasing inventory and a decline in sales or a flat line in sales, that is a red flag that needs to be addressed, and that's where your balance sheet can be so incredibly important. Another example is payables. So let's look at payables. Here we've got an increase in our payables by $15,000 relative to July, and that is a problem as well, because now I'm starting to wonder, do we have enough cash to pay? Our inventory went up, which is probably one of the reasons our payables went up, and that's the kind of issue that can become problematic. An increase in payables, an increase in payables can be a signal that there are liquidity issues in the business. Not always, but it's something to look out for, and this is what that would look like. And I tell you here, the last one we're going to talk about is declining equity. And again, it's not always a problem, but it can be, because remember what I said in a previous video is that the financial statements don't tell the whole story. They tell you what happened, but sometimes it's extremely important to know why it happened. Okay, if you are having a decline in equity because you simply took money out of the business and you understand that, then great. If you are seeing a decline in equity because you have sustained net losses month over month over month over month, that's a much bigger problem. If you're bleeding money and you have sustained losses, that's an issue. And the one other thing that I want to point out about this one is that in this case, we actually have negative retained earnings. And that means that over the life of this business, we have a couple of things could be happening here. You've withdrawn more than you have in retained or accumulated earnings, or you have sustained losses. So again, it helps this tells you what the problem is. It doesn't necessarily tell you what the symptoms are. So that's where you start doing a little more digging. But if you don't look at this, you won't know where to dig, right? You've got to be able to read your financial statements to figure out where your problems are. So that's it. Put your comments and questions in the comment section below. If you have something that you'd like for me to cover specifically, let me know that too. I will put it on our agenda to make sure we cover that at some future point as well. And please follow the page. Thanks a lot, and we will be talking about Something a little different in the next video. We're going to actually discuss red flags on your balance sheet, but not as it relates to operations. This is more kind of pre-good bookkeeping and accounting, if you will. I'm going to help you diagnose whether or not you have some problems with the fundamental accounting behind your balance sheet. So it's more balance sheet red flags relative to good or bad books or wrong books. Talk to you guys next time.